All right, let's jump right in.
Let's do it.
We're looking at an investment thesis for Rezolve AI, ticker RZLV.
Yeah, the one making the bull case that it's a huge buy now that it's been crushed down to around $3.
Exactly. The whole argument is anchored by this new $250 million financing round and some really aggressive 2026 guidance. So let's get straight to the critique.
I see the ambition. A $250 million infusion is a serious vote of confidence.
But the connections need to be stronger. Okay, so first point. The crucial connection between that reported $230 million cash on hand and the ambitious $500 million 2026 revenue target needs to be strategically established.
Right. That bridge isn't just implied, it needs to be built brick by brick for the reader. And the weakness right now is that the thesis kind of presents that cash as just, a safety net.
It's like, hey, we're not going to go bankrupt.
Exactly. But it doesn't clearly show how that capital generates the massive acceleration from $6.3 million in H1 revenue.
All the way up to $500 million. That's a huge leap.
It is. That kind of growth demands a precise operational roadmap, not just a financial backstop.
So the suggestion is you have to detail the engine, show how this fuel creates that velocity.
Precisely. The argument has to explicitly outline the strategic deployment of the funds.
Where's the money going?
Yes. The specific R&D initiatives, the sales scaling, show the math.
So some concrete examples?
For instance, you could specify that the cash provides runway to really scale up the co-selling agreements with Microsoft Azure and Google Cloud.
Okay.
Or get even more granular. Say something like, 70% of this capital is dedicated to tripling the sales force needed to onboard enterprise clients like H&M at scale.
Show us the spending matrix.
Exactly. Show us the matrix.
That definitely strengthens the financial story. But that leads right into the next big hurdle, which isn't just about spending the cash.
It's about competence. Execution.
Right, which is our second point. While the piece dismisses the outdated H1 data, the concerns it raises about execution risk and cash burn, they require a much stronger, more proactive counterargument.
Yeah, the weakness here is that the thesis, it sort of name drops these risks, which is good, but then it just pivots away.
Pivots right to the Wall Street analyst price targets.
Right. And while analyst support is nice, for a sophisticated investor, that's a deflection. It leaves that core structural concern just
sitting there.
Unaddressed.
Totally unaddressed.
You can't just wave away cash burn concerns by pointing to a price target.
So what's the fix?
Well, the bull case needs to integrate a dedicated counter-narrative. It has to tackle the risk head-on.
Show the reader why this specific team can pull off.
Yes. What makes Rezolve's structure, or their tech, or their management uniquely positioned to overcome these, typical high-growth SaaS hurdles?
So you need some hard evidence, proof that this team can handle that kind of scale.
You do. This could mean highlighting specific C-suite expertise. If they've scaled similar platforms before, that de-risks the management factor right away.
That makes sense.
Or use the company's own numbers. That staggering 426% year-over-year revenue growth. That's current, hard evidence that execution is already significantly de-risked.
And the cash burn?
You have to talk about it. Provide a rough estimate of the current monthly burn versus that $230 million reserve.
Show the runway.
Show the runway. Demonstrate clearly that it extends well beyond the critical period they need to hit that 2026 target.
Okay, that's powerful. So to quickly recap the actionable advice. First, strategically connect that $230 million in cash directly to the $500 million ARR guidance. Detail the operational plan.
Show the work.
And second, bolster the argument by preemptively addressing and neutralizing those execution and cash burn risks.
Use specific evidence. The team, the growth, the runway.
Exactly. Don't just dismiss the risks, dismantle them.
Take those 2 points, refine the material, and we look forward to seeing the updated version for a follow-up.